The images were impossible to miss. Hotel lobbies, gallery tables, and a young woman whose name carried the aura of old money. The story that followed was simple and sticky. A foreign heiress moving through New York and Europe, wiring funds tomorrow, living large today. In this episode, we examine the mechanics of social proof through the widely reported case of Anna Sorokin, also known as Anna Delvey. Our goal is not to dramatize any past matter or to restate allegations. It is to extract practical red flags for hospitality and finance staff, for creators, and for anyone who works in spaces where status and credit often blur. Social proof is the feeling that something is true because everyone around you acts as if it is. Hotels extend credit because other hotels have done so. Restaurants accept a signature and room number because a concierge waves a guest in. Galleries open their back rooms because a familiar name or a well-dressed entourage enters with confidence. Social proof is powerful because it compresses due diligence into a glance. When a room is busy and a guest appears to belong, the mind relaxes and the clipboard closes. That is where risk begins. Let us break down 5 tools of social proof that featured in public reporting and that appear in many other contexts. The first tool is venue anchoring. High-end places signal legitimacy to one another. When a guest is photographed in a luxury lobby or tagged at a well-known restaurant, that image travels like a reference letter. The second tool is proximity to recognized people. A guest pictured with influencers, curators, or executives inherits their aura. The third tool is confident logistics. A personal email domain, a private driver, a late check-in with luggage shipped ahead, a table that appears reserved. The fourth tool is deferred settlement, a promise to wire funds after the weekend or once an overseas account clears. The fifth tool is narrative density, a compelling story with many proper nouns, family offices, foundations, investors, which makes questioning feel impolite. From the perspective of a hotel manager or front desk agent, the day-to-day challenge is that not every wealthy guest follows the usual rules. Some do arrive late, extend stays repeatedly, and arrange payments through assistants. The safety habit is not to treat unusual as illegitimate, but to separate identity from settlement. Identity answers the question, who is this person and who is responsible for the bill? Settlement answers, how and when will payment clear? Social proof makes both answers seem obvious. Procedure makes both answers verifiable. Here is a clear procedure you can adopt. At check-in, require a valid payment card with authorization for the full stay or a deposit that covers an agreed number of nights. If a guest prefers wire transfer, issue a pro-forma invoice with banking details and a due date that is before the credit falls below the cost of the next 24 hours. If an assistant will handle payment, obtain a letter of authority on the company's letterhead with a contact name and a landline you can call independently. If the guest's email uses a private domain, verify the domain's registration and call the office via the number on the public website, not the number in an email signature. These steps do not insult legitimate guests, they protect everyone. Restaurants and events teams can mirror this approach. Accept holds with a card on file, not only with a name. For large bookings, take a non-refundable deposit that is applied to the final bill. If a guest is introduced by a concierge, confirm the arrangement on a recorded line to the hotel front desk or guest services, and document the maximum coverage. If an event promises payment tomorrow, ring-fence the venue's exposure to a fixed amount and a fixed time window. When terms change, pause service until settlement catches up. In the creator economy, social proof has moved online. DMs arrive from accounts that look like brands. People offer collaborations and promise payment after publication. The same habits apply. Ask for a purchase order and a contact at accounts payable on a public domain. Send your invoice on your own terms, with late fees and a 50% upfront policy for new clients. If you receive a contract from a private email address, route the conversation to a verifiable company domain before you begin work. Public reporting in many industries shows that unpaid invoices cluster where social proof substitutes for process. Language helps when status is involved. If you need to ask for a card or a wire in a room that prizes discretion, use calm, neutral lines. At a hotel desk, For your comfort, we pre-authorize a card or confirm today's wire before extending the stay. May I help with the transfer details? At a restaurant. To protect your reservation, we place a small hold that is released on arrival. Which card would you like to use? For events, we'll lock your date once the deposit reflects. Here is the pro forma with our bank details and reference. The tone is service-oriented but non-negotiable. Let us look at the psychology of invoices and IOUs. An invoice is a promise turned into a document. It carries a date, a sum, a due date, and banking details. When an invoice is used with clear authorization and the name on the account matches the company, settlement is likely. When the invoice arrives late at night from a private address with a new beneficiary name, settlement risk increases. In high-pressure environments, staff may feel that an invoice snapshot on a phone is enough to keep service going. It is not. Settlement requires verification through a channel you control, not one the guest controls. Consider a practical scenario. A guest asks to extend their stay by 3 nights. The existing card on file has reached its limit. The guest says a wire will arrive tomorrow and offers a screenshot. The safe response is to extend 1 night against a new authorization or to pause the extension until funds reflect. This is not adversarial. It is policy. If the guest's status is genuine, they will understand and comply, or their office will assist. If the story is pressure without funds, the conversation ends safely before exposure grows. For finance teams, 3 controls reduce exposure dramatically. First, daily aging. Review all accounts in arrears every morning and stop loss early. Second, 2-channel verification. Accept changes to payment details only if confirmed by a known contact over a separate channel, such as a phone call to a published number. Third, tight cutoffs. If a wire is promised by a set time, set a rule that service pauses 1 hour after the deadline. Document every exception and require sign-off from a manager, so that exceptions do not silently become the norm. The broader lesson from social proof is that optics move faster than money. Clothes and company can be rented. Locations can be tagged without context, and names can be borrowed. Money, however, clears through rails with timestamps and references. If your workflow puts optics ahead of money, you are playing a game designed by someone else. Reverse the order. Verify money, then extend trust. Do not confuse the feeling of belonging with the fact of settlement. Let us now extract a red flag checklist for front of house, back of house, and creators. First, a guest resists any card authorization and insists on a wire tomorrow for multiple nights or large bookings. Second, email domains look private or recently registered and the sender avoids public landlines. Third, contacts change frequently. A new assistant appears, then another, each with a different story. Fourth, references to foundations and investors abound, but written authority is vague. Fifth, invoices are offered as photos with cropped details rather than as PDFs sent by verifiable offices. Any 2 of these flags together should slow or stop service until verification is complete. If you discover after the fact that a bill is unpaid, treat the matter like a standard receivable. Issue a formal statement and a demand letter. Contact the guest or company through verified channels. Consider small claims or civil routes as advised in your jurisdiction. Avoid public accusations on social media. They rarely help and can create new risks. Focus on documentation, contracts, and calm correspondence. When you share lessons internally, emphasize procedure rather than blame so your team feels supported to follow policy next time. For listeners who are not in hospitality or finance, the same ideas still protect you. When you collaborate, when you rent equipment, or when you agree to hold something for someone you barely know, separate identity from settlement. Verify identity in ways you control. Collect a deposit or collateral before you advance goods or labor. Use contracts with clear names, addresses, and bank details. The higher the status cues, the more you should rely on boring paperwork. That is how status stops fooling smart people. We close with a calm summary. Social proof is a real signal that can be earned. It is not by itself a method of payment. Hotels, restaurants, galleries, and creators can continue to be generous hosts while running tight settlement practices. The line is simple. We are delighted to serve. Payment or authorization first. This balance keeps doors open for the right reasons and closes a few doors to prevent regret. In our next episode, we move from social proof to audits and House of Cards signals in the story of Wirecard. We will explore how third-party processors and complex structures can obscure where revenue truly comes from, and how everyday readers can spot risk before headlines arrive. Narration generated with AI, facts verified from public sources. No legal advice is given in this episode. The purpose is education and public safety. If you have a case tip or a documented pattern to share, use a safe channel and remove personal information that could identify non-public individuals.